Good afternoon, Maverick traders. It's the 2nd of May. Joe with you here on a market roundup. Let's jump into it. I've got my 2 cents. Take responsibility for the outcome. You guys know the drill. So into the market analysis, it was more of the same. A bearish day since kind of the hesitation on Monday. It looks to me that it's going to be basically a resistance level hit technically. We'll get there in a second. How did we finish? The Dow, the S&P, the Nasdaq all lower, just by 1%. The Russell down about 2%. Here's something that I think is interesting as we get closer to the Fed meeting tomorrow. That's right, folks. I see oil down almost 5.5%, but gold up 1.75%. And I have a lot. I'm going to put a lot on what the markets are expecting the Fed to do, which is be dovish, maybe raise that quarter point. This might be the last raise for 2023. It just depends on what the Fed speak is. So the slowdown in the economy, we are seeing it in the tea leaves. Let's take a look at our daily news here. Slowing economic numbers and the job openings and factory orders today, they were slightly lower. We still have the ADP employment number as well as the FOMC Wednesday. So we are in the situation where bad news is now bad news. The markets reacted negatively, and this was in the futures when both the job openings and factory orders came out lower. Things started to slide. Earnings is continuing, and earnings have been mixed results. And you know what? I don't want to say results anymore. I want to say mixed reactions, because we have a lot of stuff that has beat, but has projected lower. And so we're starting to see things gap up and kind of trail off. Things that miss are getting punished. So it is bearish out there, although the overall markets are showing a pretty good bullish trend. It's difficult to figure out, at least for now. The advanced decline line today being a down day, down 1% across the board. We got 73% of the stocks declining, 24% advancing, a few percent just staying flat. Below the 50-day moving average, we got a 62-38% scenario. So glass half empty. Now, when we see the 50-day moving average, I can see that number within 2 up days or 2 down days in the overall markets sway quite a bit. Meaning we could see the 62% bearish and 38% bullish. I could see those flip-flop within a couple of days. That tells me there's a lot of stocks that are playing with their 50-day moving average now, which kind of correlates with the overall downtrend, or I should say bearishness, of the markets since the beginning of 2023. Now, as this continues, right, the 50-day moving average is just a measure of 50 days. As soon as the 51st hits, they get rid of the first, right? And that's how this moving average rolls. So the flatter that line gets, the more that we can expect these markets to continue to consolidate. And overall, that's kind of what I'm saying. So let's just go ahead and jump into it. Here's this SPY. And what I'm looking at is this beautiful ascending triangle pattern that we got going. I can actually take it all the way back here if you guys want a deeper marker. And this is that high. Right? Okay, cool. Ascending triangle pattern looks pretty good. Now that's since the end of 2023, or excuse me, 2022. The beginning of 2023, we had a pretty good move to the upside. One thing that I need to make mention of as of late, and I think this has a lot to do with where the Fed is at, where the sentiment is at, is we are more into a consolidation area than anything. So we're going to bounce around, chomp around. We did go a little bit lower. The beginning of last week, but Thursday and Friday really pushed us higher up to those resistance levels. So I'm leaning more towards a consolidation than I am an overall up or down trend in either of these markets. Let's get to the Qs here. Qs the exact same thing. It's a little bit more resilient, shows some strength. Yeah, tell me something I don't know, Joe. Here's this beautiful ascending triangle pattern where technically we are already above it. Now, let me get rid of that and let me snap these same lines in something distinct. This breakout is now support. You guys can see that we hit it midweek last week and then popped up to threaten breaking higher the end of last week. Now this week it looks like we're pulling back a little bit, so I'm just going to go ahead and show my hand, folks. I'm still glass half full, just based on the overall trend and where the 20 and the 50-day moving average is. I am a trader that is usually average of 2 weeks to 4 weeks at most, maybe even 1 week to 4 weeks at most. So my trends aren't going to be the big picture. They're going to be these consolidation areas or these retracement areas. We're sitting at this level going into what could be the last Fed rate hike for 2023 if this economy is indeed going to get weak. Now that leaves us with all sorts of different problems. And let's take a look at this heat map as I get there. Not mass selling, but a lot of selling across the board. It was a very healthy correction. Yesterday was a stall out. Today, downward. Lots of red and energy in the financials, semiconductors, things of that nature. But we did have some outperformers. Amazon, which did really good on their earnings announcement on the 27th, so a few days ago, but was met with immediate selling. It's still in an uptrend. It's still bouncing off of moving average. In fact, folks, I would have Amazon as almost a buy. But the initial move off the top and off these announcements that I've been noticing so far is bearish. So I'm starting to see the longevity of the worry, or I should say the worries of the slowing growth and a slowing economy, dare I say recession, moving forward, really starting to play itself out. That's hearsay. That's my opinion. Let's go to what's in front of me. So here's my market outlook. I'm a +1 and a +2 monthly. Why is that? It's obvious. And I'm not going to have to zoom too big into these charts. I'm just going to draw what I see. I see an ascending move here with higher highs, higher lows. So I've got myself this established move upward. Now this is the shorter term, right? I'm a 1 week trader to 4 week trader. It is up against resistance. It's above its moving averages. So here's my checkpoints. Above the 20, above the 50. 20-50 slope is correct. So overall, monthly wise, I have to stay a little bit more bullish, which is easy for me to do. If indeed these markets are going to be fine and sentiment's okay, meaning we understand that we're going to see the economy slow down, but people believe that these stocks are at a discount, this will continue higher. When it comes to what the projections of some of the numbers are and what some of these companies have been doing, they're worried about contraction, slowdowns, maybe laying people off. We've seen Meta do it consistently over the last couple of quarters. And a lot of the larger tech companies, including Amazon, Disney, one that did great, but they're worried about their Disney Plus. It's not making money. So it's all good, but ... And that's kind of what I'm seeing. It just depends on where the sentiment is with the markets and how we deal with that moving forward. Interesting enough, all that aside, technically, wow, all my bears are working and none of my bulls are. So is it just because I caught the markets on an extension and it's pulling back? Probably. It could be. But you'll see with some of these charts, it might be more than that. Now, I'm going to have to say this sucks to try to do these trades because a lot of them still have to do earnings, and it can throw things off. But if we could have their earnings kind of give us an idea of where they could go, we might be able to take advantage of it. So let's start with the bulls, the WPM. Now, this has earnings 2 days from now, on the 4th. At the PM. Now this is Wheat and Precious Metals Corp, basic material, and this has been doing really well because of the expected slowdown in the dollar or the decrease of interest rate rise. Look how volatile this bad boy's been over the last five or six trading days. Wednesday, Thursday, Friday of last week, Monday, Tuesday. That is incredible range, and it's because of this. We're getting into a Fed meeting. The dollar could be weak. Gold could be strong, and we're seeing gold do the same thing. Gold's a pretty big mover as of late. You guys saw that was up almost 1.75% to date. I like the overall pattern in its basic form. So if you just take a look at this as, hey, this is just a basic pullback to a support level, and it is going to break up, and here's our target around 52. Well, that's pretty obvious as a chart. Now, as a trader, you will have to play this. Look at the size of these ranges. So I don't want you guys trying to go from 51 to 51.5, or from maybe a pullback. If it gets to 48.5, I'm out. And if it gets to 50, I'm in. You're going to need, your target's got to be up here at 54 or higher. Your protection should be somewhere around the 47.5. You have to give this a wide berth if you truly believe that the trend is going to favor the precious metal. Okay, there's my soapbox for what I have no understanding to, and one of my biggest weaknesses is precious metals and commodities. So let's move over. Nothing sideways because we're in earnings season. Let's go straight to Netflix. Now, Netflix did have its earnings, missed a little bit, and it's been kind of churning around since. What I like is this bearish crossover. I do like this on a continuation to the bear side, folks. I love this bearish crossover here, and the fact that this thing couldn't even get above its or retest its crossed 20-day moving average. I love the candlestick today. It's pretty easy to see a breakdown. You guys can see I kept this zoomed out. All sorts of target. We got a target here, a target here. If you guys want to be a little bit more, what's the word, reserved, you could keep it here as sideways to down, wait for it to confirm the descending triangle breakdown. But this is one of those companies that came out and did well, beat their numbers, but they expected a slowdown based on unforeseen subscription rates moving forward, things of that nature. And I'm like, okay, well, let's see if that's going to continue. This is ALB. This is another trade. By the way, folks, brought up from the Wednesday class. Not to plug it, but I love it. And unfortunately, this has earnings tomorrow after the bell, the May 3rd after the close. But you can see wonderful descending move. Beautiful stair step as this breaks level after level. Sorry, guys, I wanted to correlate this with this level here. Back up here, you could see these two levels there. So it breaks, retests, breaks, retests, breaks, and guess what? It doesn't even want to retest this time. It looks like it might just break below that what do you want to call that, 174 level. Basic materials, unfortunately, is very good for bearish, but once again, unfortunately, has earnings tomorrow afternoon. So keep an eye on that. Maybe we take advantage of it for a continuation, or I am totally fine with you guys playing earnings as long as it's done responsibly. Position size for max loss and just, throw the dart. So here's SQ, also another trade we've been looking at on the bear side. It also has earnings on the 4th after the market, but I just couldn't ignore, well, not just this pattern, but any of the patterns I've just shown you. They're just gorgeous. So here's one right through here. Beautiful descension right on a descending 20-day moving average, and today's candle was almost the best thing you could possibly ask for. Technology, software. When I see moves preemptive to this, I expect them to kind of continue based on maybe somebody out there knows what I don't yet. Going this close to its earnings, maybe it's just pessimism. These could easily flip-flop. It is still a coin flip, guys, by the way, but it might be something worth throwing a dart at. They're kind of fun. All right, there's my 2 cents on a Tuesday over earnings season into a Fed meeting, right? I mean, can you make it any harder for me? I don't know. Markets are above resistance levels and they're moving averages. I can't ignore that. We've talked about maybe that this January rally was unwarranted, it's overzealous, blah, blah, blah. All my bears, I've got good conversations for that. However, maybe we did hit that bottom going into the end of the year. Maybe it is over-exaggerated. It's not as bad as people think. Well, in 5 years, I'll tell you who's right. We have to trade the markets in front of us. So we're in kind of a high-base consolidation. I'm still bullish. You guys saw +1 for the week, +2 for the month. If we can stay above these levels, we have set higher highs. We are above moving averages. They have crossed. But the markets have been basing tumultuously, but they've been basing over the last week or so. FOMC tomorrow, there's your big old announcement. 25 basis points is expected with dovish outlook. There are also rumors that the Fed might come out and say this might be the last raise for 2023. That's going to start a party. Maybe it doesn't. We'll see. I've seen it work both ways. I've seen the markets say, I told you so, we're great, we're rally. But if they're indeed laying off that much, they might be fearful of job losses, a slowdown, buildings closing, things slowing down, which is just horrible for everybody. So we might see a turn down. I don't know. It's up to what sentiment wants to do with that. We have the ADP employment number and jobless claims as well during and after the FOMC statement, but it's kind of hard to focus on those. Unless you disagree with the Fed or agree with them, then these could actually support their decisions. Earnings reports, continue to check. Like I said, we're into earnings season. It's out there. AMD. Okay, cool. So I pulled this. AMD, Starbucks, and Ford. 3 that I have. They all announced right after I started this class. AMD comes out in line with expectations, expecting slowdowns moving forward. They're down 6.5% post-market. Starbucks beat numbers, worried about their relations with China and expecting a slowdown moving into the second or third quarter of 2023. Ford Motor Company in line. I think they slightly beat or they're in line with expectations on their number, but took an unexpected they didn't make as much money as they thought they would in their electric vehicles and are projecting slowdowns in demand for cars. I'm seeing, hey, we did this, but. So I'm seeing that in in a lot of the numbers. So take that for what you will. All right, folks. Thank you so much for joining me. We'll talk to you next time.